Okay, great. Ladies and gentlemen, you're welcome. I'm going to be bringing out through on trading synthetic volatility, right? And then things you should be doing. Now, listen, there's something that's very clear to you. There's no sentiment. You see, synthetic volatility are not forex. They are simulation. And so if they are simulation, are they bad? The good side of it is that you can trade it all the time, right? You can trade all the time. That's one of the first benefits. The second benefit of synthetic trading is that you don't need to pay attention to news. So whatever want to happen to news is none of your business. Okay, so if you can just let's quickly run a kind of inquiry of pros and cons of synthetic trading. Pros and cons of synthetic volatility trading over forex trading. So let's look at it. Let's look at it. So I am just going to give you an objective. Okay, which response is more? Your choice helps you know. It's definitely this is from refer to as volatility. Okay, yeah, too long. It's too long. It's too long. It's too long. I just want to pick something. Okay, so I just want to pick something. Let's look at it. Pros and cons, right? So say like so regulatory market behavior, right? Pros, unlike forex, which sleeps on weekends. Synthetics are very open every single minute of the year. So you can trade. Okay, so zero news, just like what I've said. Constant volatility. So, okay, low entry barriers. Okay, so cons. Broker dependency. These are proprietary. If the broker, like Deriv, has a server issue, the market stops. You are trading against the broker's algorithm. So that's what I want you to get clarified. You are, I don't think that's, see this one. You are trading against the broker's algorithm. So lack of fundamental context. You cannot use real world logic, like the dollar is strong because of interest rate to predict moves. You're 100% reliant on the shift and all of that. Then, limited regulations, synthetic brokers operate in offshore jurisdictions. Just, we know that one, it's not an issue. Right. So, what I want you to know is just like what I have put up now, right? Forest in the real world, forest and all of that. Okay. Okay. So, now let's go quickly because I just want you to understand. Now, once you are trading synthetic, number one is that you're actually trading every time, no stopping, nothing, and all of that. So it's regular. Now, the negative side is that you are trading against the broker. That's the truth. Now, so that's what's that meaning? The meaning is that you are more manipulated. Okay, so you should understand that. But if you lose, you can quickly make money back. So, but to understand that you are trading against the broker. And now, so if you look at the two side now, we have derivative synthetic, and then we have, we make use of derivative and word trade instrument. Now, there are other new ones that are coming, like think market and all of that. This is the thing. I just want you to understand so that you prepare your mind and yourself. I don't have sentiment. Now, if you are trading with derivative, um, one advantage of derivative is that it had more volume already, and it respects structure more already because of we have more previous data. Derivative is over 25 years now, right? We get into 30 years in operation. Yeah, so others just come maybe barely 1 year or 2 years and start trading synthetic, right? So WellTrade have been a broker for about 19 years, but started trading synthetic a few years back. So the manipulations in both. This WellTrade have some kind of slow pace movement. Sometimes will not respect the structure you actually play, so it may take time. But the reef have more structure. But the advantage is that the setup, okay, you can have so many instruments that you can leverage on and can make money in both. So let's quickly go. I want things that are needed for you to trade: key levels mapping, daily candle close and open, daily range, and all of that. So let's do this thing. Let's go to the reef first. So I'll pick any instrument. So I'll pick, now as a beginner, and then you start with small money, I would advise you to trade like, you know, volatility 10, another type. Okay. So now on daily time frame, so what do you mean by key level? So we just want to look at a major zones. So if I take here, just want to find some major zones. Let's say here, it's a major zone. And if we look around, can we check this? Is this a major zone? Yeah, let's see. So I think it's okay. So no need to go up and down. Right, so now if I've marked the major zone, so next you want to look at the daily candle matters too. You want to trade. So look at this instrument now. So remember what we do on P&L trading strategy. So you want to look at the previous day high and the previous day low. You get it now? So, so what do you mean by range? So daily range could be the swing low, the swing high. So if you look at it now on this, where are you going to call a swing low and a swing high? Yeah, well, so they can say this is a break of structure. Okay. So that means you are looking at this point to this point as your focus. Now, so next you want to go to what we call the structure. So 4 hours will actually give you your structure. So let's go to 4 hours to look at our structure. So 4 hours, you have a pure structure now. So that means on my 4 hours, I'm having this a break of structure. So I want to look at the recent break. That's where my job is. Recent break. So there are other break there, here. So these are not my job. So recent break, and then this is the low. This is the break of structure. This is the low. So now what am I looking for? I've seen the structure, and then, so we said the next thing is called the PDRs, and then AOE, AOF, remember? So we have key levels, mapping, daily candle, close and open, then daily range. I've seen that, so not to matter. So the structure, 4 hours, 1 hour, and all of that. Yeah. Okay, your PDR is structural footprint. So what am I going to use to map that Fibonacci retracement? So I'm going to go to my Fib, and then I pick it on, start from this low, swing low, to this swing high. Okay, so if I found this, that means I'm looking at this point to this point. So let me take my, so my first take profit when I find entry on this trade is this. Second one will be here. So that means at the key levels. Okay, so you can see that making sense. So if you look at it critically, the market is going to return back here. So that means ordinarily we have another block here. Will the market come down to that point? We don't know. So we have a demand zone here after this. So that means you're just looking for the market anywhere here. That is what called optional free point. So we didn't have any fair value gap whatsoever. That will make more sense. Now, so I've seen the structure. If I have patience, I'll wait for it. If I do not have more, I could drop down more to like 1 hour, right? Some trade mostly on 1 hour. So I can go to 1 hour. And what am I still looking for 1 hour? It's still structure. So it's still the same structure we have here. The swing low, and here's the swing high. Remember that was the previous day high. Okay. So that's swing high, swing low. So you still do the same thing, and it's still the same thing you're going to get. So that means you're looking at this or this. Then if you look at inside this, do we have any fair value? No. So still this sign this space, like as another block. So you're waiting for the market to actually drop. So in 1 hour, so that you can come back to it. Okay, so the selling continue, right? So until the market flatten to this point. So the last point actually wait if you just want to find, sometimes you could sell down against the trend, waiting for the market to come down to that point. That's how you trade, right? By structure. Now, one of the things is that this guy to have a very crazy internal structure. On your 15-minute, look at it, high, a low, a high, a low, a high, a low, a high, a low. So you'll have been scalping it in that way, okay? Okay, so you just have to wait, okay, on your 1 hour. So let's take another instrument. Perhaps let me take maybe boom 1000. So that's all other ones just the same pattern. Boom 1000. So I go to my daily. So let me just take my horizontal line. So I drop this one here. Then drop this one here. You see that? And should just be maximum of 3. So let's say to the bottom. So you have delineate this market. So travel from here to here. We break it, retest. You understand? So you just now some we're talking about trend line and all of that as well. It's not bad. Sometimes if you remember, sometimes I don't remember to use trend line. Okay. So some say when it cross here, retest it. I say, well, those are areas of liquidity. Now, so here we have this the same way, and then you want to go to 4 hours. Like I said, the candle first. Let's look at the candle close yesterday. So this candle close bullish yesterday, but not above this. And this one start today. We close bullish today. That will make sense. Tomorrow will continue in that order. So let's look at 4 hours. So 4 hours, you are still in a downtrend. This is a low. Okay, let's say you're already having a structured break. It has not broken. So you need to break and retest. So it's going to break and retest. Then you'll be looking at this point. You'll be looking at fair value gap here. And that's going to form a lot. So the same way, go to your 1 hour. Okay. Then you can see your 1 hour. So the same thing. A low here, a high. You have a low to break structure. Okay, so there's something I was talking about and I have not added it. I say supporting tool. I've used the Fibonacci retracement. Have I? Okay, so there are supporting tools who have MACD moving averages. Now the MACD, I change it to my own type, which is MT5 type of trading view. Now you quickly ask me, what do we use MACD for and trading view? It's not what for you to trade with. It's just to support your second confirmation for your intuition, right? So when you look at momentum, so momentum is very important. Secondly, when of course the market's creating a divergence, they're very important. So the moving averages help you if you're a scalper. So I had two moving averages. So one can be on 10 or 9, depending. Okay. So why the second one definitely is 200 moving average. 200 moving average. So the same way. So it's the same you are going to use for well trade. Because when I go to the instrument to just do some demonstration. So you see when markets continue trending, your 10 exposure moving average will continue to follow. You can look for another buy or sell when the market is going, and you push out of the moving average and return, then you want to take an entry just like this on a coffin candle for an entry. Remember, this is 1 hour time frame. So let's look at 15-minute time frame. You understand? You could find an early entry when market reclaim like this. So the MACD too. One thing I love in MACD is that it make you to avoid when market is just choppy, because this is a volume indicator, so it shows you the momentum. So you can see when the market gain momentum. Then we'll go to 5 minutes. So here is 5 minutes. Look at your MACD. You scalp good. Sorry, 1,000. Of course, you work with your structure, not just like looking at MACD. So the structure like on this 5 minute now. How does it go? But please, when you're trading boom and crash, have reasonable money. This is a low, this is a high. Then you need this high to be taken. Just to show you an example. So if we go to that bull 10, volatility 10, choose the same thing. Remember, we're waiting for the market to come here. So that's how you actually look for market with your structure and then supporting tool. On well trade is the same thing. The same structure, everything is the same thing. So just copy and paste what I've shown to you here. Doesn't matter either it's pain and gains or flips or vol. We advise people to trade more of flips when your money is very little. Right, so that's what I have for us on trading volatility. More videos will come on to identify and know how to trade volatility. Have a nice day.